Welcome to The Explainer. Today we're diving into something big, a real seismic event that market watchers say is unfolding right now inside the COMEX, which is really the nerve center for global metals pricing. And we're going to look at the hard numbers that point to a historic run on physical silver happening as we speak.
Okay, so let's get right into it. It all kicks off with this one number, 60%. I mean, that's a huge figure, and it represents a massive, and I mean incredibly rapid withdrawal from the market's most critical stockpile.
Yeah, you heard that right. In just the first 4 trading days of December 2025, a staggering 60% of the silver that was ready to be delivered just vanished from the COMEX vaults, claimed. More than half the supply gone in what feels like the blink of an eye.
So what's really going on here? Well, the market commentators we're looking at are all saying the same thing. We are witnessing a historic run on physical silver. And let's be clear, this isn't some small trickle. They're calling it a tidal wave.
All right, so let's try to wrap our heads around the sheer scale of this, because it's the size of it that's sending this shockwave through the entire system. Okay, so check this out. In early December, you had this unprecedented number, over 9,500 futures contracts that stood for delivery. Now, usually traders just roll these paper contracts over into the next month, right? It's just a financial instrument. But not this time. A massive number of them basically said, nope, we don't want the paper. We want the actual metal. And if you do the math on that, well, it's pretty staggering. Those contracts translate to 47.6 million ounces of physical silver. At around $57 an ounce, you're talking over $2.7 billion worth of metal just being yanked out of the system. And that dollar figure, that tells you everything you need to know. This is not your average retail investor buying a few coins. No way. The size of this withdrawal just screams big money, you know? We're talking large, deep-pocketed players, institutions, major funds, maybe even governments, all making a very clear, very deliberate move for hard assets. So this huge demand for the physical stuff, it's being held up as proof, really powerful evidence for a much bigger theory that analysts have been talking about for a while now. They call it the Great Decoupling. So what's the theory? Well, it basically says that the price of paper silver, things like futures contracts, is finally breaking away from the price of the actual physical metal. For decades, the entire system has kind of operated on the idea that they're the same thing. An IOU for silver was treated just like silver itself. And that's the core of it right there. The argument is that after years and years of this paper game, built on all this leverage, where you might have hundreds of paper claims for every single ounce of real silver in the vault, the big players are finally calling the bluff. They're saying, enough with the IOUs. Show me the metal. And the people who believe in this decoupling theory, they're pointing to 2 key signals in the market right now. They're seeing these as undeniable red flags that this isn't just some abstract theory anymore. This is happening right now, in real time. Okay, the first red flag is something called backwardation. All that means is the market is willing to pay more for silver for immediate delivery than for delivery in the future. Think about that. People are paying a premium to get it now. That only happens when there's a serious fear that it just won't be available later. It's basically the market's ultimate alarm bell for a supply shortage. And the second signal? It's just the raw, blistering speed of it all. I mean, the amount of silver being pulled out in just a few days, it completely dwarfs what you'd normally see in an entire month for most of the last 4 years. The only time we've seen anything like this was during the absolute chaos of the COVID crisis. So that begs the question, right? Why now? What's going on? Well, analysts don't think this is random at all. They see it as a kind of breaking point, a market that's been under intense pressure from 3 really powerful real-world forces all converging at once. You've got this perfect storm of demand. First off, relentless industrial demand. Think solar panels, EVs, 5G, all of it needs silver. Then you've got massive buying from sovereign nations, who are starting to treat silver like a strategic reserve. And on top of all that, you've got this global flight to safety, people wanting hard assets as a hedge against their own currencies losing value. And the numbers back this up big time. Industrial use is up an estimated 15% just this year. And at the same time, central banks and governments have reportedly scooped up almost 40 million ounces. To put that in perspective, that's over 1,200 tons of physical silver. And guess what? All this pressure on the physical supply, it's showing up in the price. As of December 4th, silver is up a stunning 94% for the year. The argument here is that the price is finally starting to reflect the reality.
of just how tight the physical supply has become.
Okay, so when you connect all these dots, you have record demand for physical silver slamming right into a rapidly shrinking inventory. And that brings us to the biggest question of all. What happens next?
Well, according to observers, this whole situation is creating a potential countdown to a crisis. I mean, if this withdrawal rate keeps up, they project the registered vaults could be completely bare by mid-December. And that sets up this critical deadline on December 23rd, a date that could be a real moment of truth for the entire paper market. Because think about it. If the physical supply is gone and the COMEX literally can't deliver the metal it promised, some analysts are warning this could trigger what they call a traumatic repricing. It's a fancy term for the paper price being forced to skyrocket just to catch up with the reality of how scarce the physical metal actually is. So, look, this is the crucial point. Let's strip away all the speculation, all the what-ifs. The argument that's being made here really boils down to three core undeniable facts, things you can see in the market data right now. Okay, fact number one. This drain on the COMEX is real, it's happening now, and it's historic. Fact number two. The market's internal structure, that backwardation we talked about, is screaming that there's stress and a fear of shortage. And fact number three, that 94% price jump for the year, that's the market validating this whole story of a tightening physical supply. So the big takeaway from all this analysis is that this isn't just another price rally. That's not how it's being framed. It's being seen as a fundamental rejection of the paper system, where all those IOUs and promises are finally being called in. People want the real metal. As the source material concludes, the silver squeeze isn't a rumor anymore. It's a current event. And that really leaves us with a final, pretty powerful thought. The sources here frame this whole thing not just as a price surge, but as a direct challenge to the very integrity of the market. It really makes you wonder, if the physical silver in the vaults is the foundation that the entire price is built on, what happens when that foundation starts to crack?